Hey traders, thanks for taking a couple minutes to check out this video. And this video is going to cover a trade in the Euro US dollar 5-minute chart on Friday, non-farm payroll day. And you know the numbers come out, and I don't really trade the news, the spike in the news. You wait until the market settles down and take it from there. So let me just walk through a few things here and what I was looking at. And the whole purpose of this video is going to be talking about knowing the overall sentiment for the day, what to do around news, which is quite simply, for my plan anyhow, is just to sit aside and let it do its thing. There used to be a time where trading the news was a very profitable venture, trading the news spikes, but especially for the retail brokers, it didn't work out very well for them. So the inefficiency that was available is pretty much no longer available. So let's take a look what we're looking at here. If you traded the London session, you knew that you were trading inside of a range. There's money to be made trading inside of ranges. I generally don't do it. I'm looking for something to get the market going, and you could trade from support to resistance and back and forth, back and forth, back and forth. If that's your thing, that's not my thing. Maybe because I'm not very good at it. That's probably why I don't do it. I haven't really tried it, but there's always little moves in here. You can scalp out some pips there, but I don't want to get too off topic here. So it's just about following a trade plan, and this is just about following your trade plan and knowing and having confident in your trade that the slightest little indication that might be some problems, you don't just get out of the trade. All right, now you're going to see there's no indicators on my chart, right? There's no fibs, there's no MACD, stochastics, whatever. Once you start getting a handle on price and what moves the market, then you start to get a handle on a different way of trading. So over here, you saw the news come out, right? This is the that line didn't work very well, did it? This is the news spike that happens, and if you breakout traders that were looking to go long above here, they're going to be there. They got a bit of a bump, and I've never really traded the news spikes like this and how it is nowadays. So whether they got filled or not, and whether they got the profit out at a good level, I don't know, right? I'm not going to guess. And so this happens here, all said and done, and the market comes back. Now here's the good thing, this was basically the high of the session, and I'm talking about from the day before, right? So we're making some new highs up here, as you can see right here. Market doesn't hold the highs, right? So overall for this day anyhow, I'm not looking to go long. What was happening was about 9 o'clock there was stocks were weaker, right? The word was that the stocks, U.S. stocks, can be weaker, right? When you have weaker U.S. stocks, what does that mean, right? They're a lot riskier. So it wasn't one of those days where a lot of traders are looking for risk type plays. And after the news came out, we had a bit of a chopping session in here, right? But here's something really interesting. And this is what I played, and I'm going to show you it as well. This is my entry right here. This is about 38.20. It's not about. I'll show you the chart, but it's 38.20 in this area right here. And the stop on this trade was minute. It was very, very low double digits. And what I mean by very low, I was looking 8 to 10 pips to trade to go against me. The good thing was I didn't suffer any heat in this trade. And the reason why I didn't was a couple of reasons. Number one, the market wasn't going to hold the highs. I had no worries about it breaking above and just keep going above, right? There has to be. There wasn't the week was tough in general. It was back and forth, back and forth, back and forth, and a lot of traders were, there wasn't a whole lot of appetite for risky trades, right? So that's always good for the U.S. dollar. And it was kind of just playing around this area right here. Stock futures had done a little bit, but then they fell back. So that's telling you what the stocks are going to be. It's going to be weaker, and going south was the preferred play. So what happens here is I go into the market. It was a market play at 38.20, 1.3820. And why did I tackle that? I tackled it for a couple of reasons. Number one, at this level right here at 3,800, there was an option sitting there. All right, it was expiring at 3,800 was the price. And if you're holding this option, you're going to be putting some stops behind there, right? Because you're going to be trying to protect that position. And just below here, you can see, we got one touch, 2 touch, 3, back and forth, right, back and forth. And what usually happens at this, right? People are buying. So what goes below here, right? Generally, their stops, right? Their stops go below there. So one thing that I was looking to happen was trade into. People say, "Oh, you're trading into resistance, support." That's crazy. No, it's not crazy. It's crazy if you don't know why you're doing it. But there was a few things going in the favor. The market sentiment was going to be down on the euro US dollar, right? Buying into the US dollar. There was an option sitting at 3,800 with stops just below it. There's stops right here. If you're a big time player, what are you going to do, right? You're going to be targeting these stops down here, right? And just below that, there was some touted demand at 37.85, 37.80. And what's below there? Stops. And I also like this little area right through here. If you look in here, right? Nice big solid move up, big fast move up, right? When you get these, generally when price comes back through it, it trades down with some vengeance. All right, so keep all that in mind. That's my plan for the day, was to short here, ride it through here, and I was looking to target in this area right here. And this is my the line. This line here represents where my target was. Okay, this was a 75 pip trade on a very, very small risk. So the position sizing is pretty decent, and this was it's a high probability trade for me. Okay, so that's my plan. And am I going to deviate from it? No. And there's a little bit of a pocket right here. Let me just clean some stuff out here. There's a little pocket of right here that started chopping around for a little while. Okay, I'm looking at a 5-minute chart here just so you can see how the flows were happening here. But there was a lot of stuff to generate the flows. The market was going to be heading down, right? The sentiment was down. Stocks were going to be weaker, right? Overall, even though those numbers came out, they came out, and the good thing was that overall was pretty good news. Why? Because there were some revisions that had happened as well. So everything was pointing for a move down. I wasn't thinking about longs whatsoever, even though the market eventually does pull back up through here, right around 10:30ish, roughly. And what's that do there? Fills in nicely this area right here and pretty much trades back up to the 3,800 level, right? And also what happened on Friday was Moody's was talking about downgrading Australia. Whoa, downgrading Austria. Sorry, I always say Australia. Austria. When you start hearing that kind of stuff, well, that gets traders kind of going. Whoa, 1 second, right? So you got to watch that. People say, don't worry about the news, but it's always good to have your ear to the news because you don't know what you're going to see, okay? Anyhow, when all this kind of stuff was happening, 100, right? 100 pips. So anyways, back to this trade because I'm always get off on little topics right here because there's just so much to cover. So basically it was a market in right here. There was no heat on this trade whatsoever. Market was targeting the 3,800 level. Why not? Right, it's there, and there's stops behind it. Right, when you're trying to protect this level, there's gonna be some stops behind it. When those stops get blown out, well, some good things can happen. Plus, you had stops accumulating through this level right here. It was a no-brainer, and there wasn't a whole lot to stop the market from falling down into this area right here. And as you can see, the market just plummeted right through, and this is what I was expecting. All right, this is why I had no problem shorting. I didn't have to wait for a breakout. I didn't have to wait for the breakout. Right, wait for the breakout. Who knows what's going to happen? You can get some slippage going south depending how fast this move is going. In here, I'm not too worried about it, right? Market just craters down here. Now, there was a little bit of an issue right here, but I had my plan. So eventually what I did was, even though I don't trail my stop down per se as a, because I'm not just going to say, well, I'm in the market, I'm in the money 20 pips, I'm going to lock in something. It doesn't work like that for me, right? I'm not going to market does all this little dance right here, and my stop goes above here, just above this level right here when we're playing inside this area, and I just walked away. It was just like either it's going to break south, right, and go to my target, or it's going to stop me out. And if I sit here watching all this kind of sloppy mess, what's that going to do to me? I'm sitting there going, oh, no, right? It's breaking down here. It's going back up here. It's spiked down. Oh, no, it flew back up. No, thank you. The best thing would be just to set the stop, just walk away. And the good news is it went right to my target and then some. And yeah, I didn't get the full full move. So what? You know, so what? I didn't have to, you know, sit in front of the computer all day either. And then, you know, obviously the market continued on its merry way. Breaks to this level right here, right? This area just marks off where there were some orders here, right here. Broke through, triggers or stops, and then, you know, does what it does the rest of the day. And that was the, just mark that off there. And this area right here was that big area right here, right? And market does this, comes back up. Interesting enough, goes up to this 3,800 level right there. And just like it did over here from my target, what does the market basically do? It comes back down pretty much this area right here. Just boom, right through here, goes back up. So the key takeaway from here was, hey, you know what? Follow your trade plan. I had a plan for the day. In one of my other videos, I admitted I made a mistake. I made a mistake, and I went against my trade plan for the particular trade. But this one, I didn't. And have an idea what the news is for the day. Where's the people that actually move the market, not us retail traders? What are they looking at? What part of what are they looking at? And they're, you know, with lower stocks, you know, in a pretty crazy week, and it's a Friday. You can't hold the highs up here. Goes back into the range. You know, make your move on that. All right. Now the good thing about this was an anticipated move. This wasn't a reaction where I saw this spike and went, "Oh, look, I can do this," and then, you know, just guesswork. You know, the whole trade was planned out pretty much. Well, not pretty much, from start to finish. The only thing that deviated a little bit was in this little area right here. It would have been nicer if it just fell, but it didn't. And when it didn't, I had to react to this, and to do what? Protect the rest of my position. And just by putting my stop in, I knew where my target was, and just let it go. And what's going to do, it's going to do. Either way, it was going to be a profitable trade. So let me just bring up the chart. Let me just get rid of this mess up here first. All right. This is the 5-minute chart of the Euro US dollar. And like I said right here, here was the news. Here was my entry right here. And 3,800 level was right here. Market broke through, and here is my exit right here in this big thrusting candle. That's a nice way to get out, eh? Buying in when the market's going down, right? For us retail traders, you know, even though you can have a pretty substantial account as a retail trader, you're pretty much trading with the your broker, the market makers, and that's just how it is. And then the rest of the day is this. So key takeaways from this, you know, if I can be so bold as to say, is number one, even though sometimes you're not going to stick to your trade plan, it's going to happen where you're going to deviate. You know, just get back on the horse and do it properly. And that's what this trade was. Have an idea what the news are. Yeah, you could say, hey, I'm just going to sit aside. But it's always nice to have a bigger macro view of what's going on, as opposed to just look at your chart, being tunnel vision in there, right? And this is just to show you that, you know, once you start reading and knowing what's going to generate the flow, where the orders are going to come from, then trading it's a whole lot different. So yeah, what we're looking here was 3820 market sell right here, and what you're looking at here was a 3745 buy right here. Zero risk on this trade, and I say zero, you know, because it's such a low risk, right? And 3820 going short, breaking below levels where there was support. Below the support there was stops. There was an option at 3800. Market with some strength broke through and finished up cleaning up that little spike down that we saw further left. And sticking to the trade plan, not getting all bent out of shape right here, just saying, okay, well, let's objective area for my stop right here. It wasn't subjective whatsoever. My stop above the price, you know, if it would have popped up, took me out, and come back down, it is what it is. But it didn't. Anyways, let's wrap it up. Thanks very much for watching, and talk later.